Guys, I did something that I very rarely do. I shorted the stock market.
You what?
Not once, but twice.
You what?
Now in today's video, I'm going to explain my position on the Russell, which is what I shorted, which is again, small cap stocks, or the stock market, small cap index. And I'm going to talk about why I took this position, not once, but I actually added a second position here this morning. I'm going to talk about all of that here in today's video, as well as the broader market, what I see coming going into next week. So as we get started in today's video, let's take a look at everything that's on the move. You do see a huge slide overnight that happened on the S&P 500. While the market has bounced back a little bit, the markets are shaky right now, and I wouldn't be surprised if we do see some continued volatility for the remainder of today. The dollar index is down pretty hard. You have the US 30 or the Dow Jones up, the euro dollar up, the pound dollar up, gold market sliding down, but peaking back up slightly here right now, and oil doing the same. Huge jump, fall, and then rising again. We're going to talk about what caused all of this turmoil in the last 12 hours, as well as how it might impact the market going forward. So last night, around 10 p.m., 9 p.m. my time on the Eastern Coast, we saw some really crazy moves in the market. The market sold off here. I'm talking about the stock market specifically. We saw oil jump, gold jump, and it was mostly in relation to what was strikes from Israel to Iran. And this update, of course, really shook the market because, of course, we've seen back and forth here, but the question was whether or not Israel was going to respond to everything that's been going on. We do see that there continues to be back and forth, but there is also scope of attack appears limited. There is a potential that this may kind of be the end of it. So if you're wondering why oil, for example, jumped up so much following and then followed with a huge reversal, if we go take a look at oil here, the story was basically, okay, a strike has been spotted, so the oil market shot up, and then Iran apparently responded with kind of as long as there's no further attacks, we're good, but if there is, it's going to be more turmoil. So the market, again, oil shot up, oil fell back down. So where that leaves us is, I think the market is reacting as it usually does to geopolitical news. The stock market on that kind of news usually has immediate drops, but they're not usually the prevailing story for much longer than that. It's just the craziness of markets is that they kind of reset and start looking back at what really is going to perpetuate from here, whether this market goes up or not. And I'll tell you where I think that really, the story really matters, is looking at yields. So if we take a look at the yields world, the yields, of course, are the reflection of what government bonds are paying here in the US. Right now, they're offering 4.62%. That's near a high of the year. Yields have continued to push higher amidst stronger than expected economic data. And this high yield, this rising yield, creates a problem for the market. Now, I'll really quick explain that. So investors have two choices. They can either invest their money in stocks or they can invest their money in bonds. And from the onset, you might say, well, what are the pros and cons? Well, the pros and cons with bonds is you're probably going to get a lot less return. In fact, you know what you're going to get in terms of return. Right now, you're going to get 4.6%. So 4.6% may not sound like a lot, but we're talking about geopolitical tensions escalating around the world. We're talking about a Fed that may stay higher for longer. So investors may say, you know what, I'm not really feeling like the stock market has much upside, so I'm going to go into bonds because this 4.6%, which has, gone up, that's looking more attractive. So pension funds, hedge funds, individual investors, they may choose to stay in money markets. They may go into treasury bonds, right? The point is they may take the risk-free route, which takes away from the attractiveness of stocks. That's the scenario that we're facing right now. This rising yield potentially hurts the story for stocks because, again, for stocks to go up, people have to be really buying them. And so if there's hesitation around the stock story right now and bonds are a rising value here, that attractiveness is becoming more attractive, that can cause a serious issue for the stock market. So all of that to say, we circle back to where we started in this video. The Russell looks bearish in my view, also because the Edgefinder has it set up on its top setups algorithm as a bearish setup. Why is that? Well, we can break that down further by going to the data scanner's indices scanner. And what we can see here is that, of course, when we select the Russell, we get a -7 score, and it breaks it down with all of the data surrounding this so that we can better understand this. So recently, economic data has just been really strong out of the US. This has led to, of course, higher than expected GDP forecasts, higher than expected PMI numbers. Services sector was slightly lower, but overall, we're seeing, the point is, strong economic data. And this strong economic data is leading to a tricky story for interest rates, right? Because rising interest rates mean borrowing costs for companies go up. Now, the Russell especially is sensitive to interest rates because higher interest rates mean, again, higher borrowing costs for companies. Higher borrowing costs for companies are not evenly distributed. What I mean by that is companies that are more sensitive and need more money to borrow, like Russell companies, small companies that are trying to grow, are needing more money to borrow. There's also a lot of real estate in here. There's also a lot of financials in here. And so when you have financials and real estate, these are debt sensitive or borrowing sensitive areas of the economy. So if it's going to be the story, now we've heard hawkishness from Jerome Powell, that we've heard a hawkish Jerome Powell for the first time in a while. That has led to the market saying, okay, we might not see interest rate cut for some time. So the story around the Russell looks less attractive to me. So yesterday I shorted the Russell, and I don't usually short indices, but I called this out in our VIP room, and I'll show you what that alert looks like. So here was the initial trade alert that I shared, my entries and the stop loss, etc. Interest rates look like they may remain higher for longer. This bodes poorly for the Russell 2000, which is an index comprised of smaller cap stocks that are more interest rate sensitive. This is due to their larger need for borrowing, as well as having less cash on hand when compared to large cap companies or the S&P 500. Retesting resistance, a downward trend, the 20-period moving average stops above structure, and the Edgefinder's bearish readings, plus a nice technical setup like I just mentioned. All of that to say I went short. Then to this morning, I actually added to the short as the price started to poke back up into resistance. So I now have 2 positions on the short side for the Russell. My initial stop loss was up here, but I have now trimmed my stop loss to this point. I'll continue to hold the Russell short, and if I make any updates or changes to this position, members inside of the Discord channel will see it there. By the way, I should mention that the Edgefinder currently is 45% off. This is our biggest discount of the entire year. I know I've been saying this recently, but let me just give you a fair warning. If you've been thinking about getting access to our fundamental analysis platform, the Edgefinder, this is the best discount that we do all year long. We're celebrating 2 years since we initially launched the product, and right now you can get, again, like I said, that 45% discount, which saves you tremendous amount of money on the tool. If you've been thinking about it, here's how you can get access to the discount. The very first link down below in the description will allow you to speak directly with someone on my staff and ask about that discount. The reason we do it this way is so that if you have any questions about the tool and you want to see if it's the right fit for you, you can speak with a real person on my team who is trained in using the product themselves. So if that would be useful to you, again, click the very first link in the description. Also, if you'd like to join the Discord, you can let them know and they can bundle it for you and get you that 45% discount as well. So here's my current P&L on the 2 trades that I am in on my momentum trading strategy. I have a silver long and a Russell short. I'm up 757 on the Russell short at the time of recording and up 540 on my silver trade. Speaking of the silver and gold market, let's take a look at that. So silver, again, consolidating here, not really making too much of a move in either direction. I do think we have the potential to move back up to recent structure highs. If we look left, you can see the 29.21 level looks interesting. Also that nice round number at 29. I think the market could have a stab at going higher. That being said, that's also, going to depend on what happens with gold. If gold, shoots lower off of geopolitical tensions subsiding, right? Oil and silver could see a little bit of a hit, but silver looking really good. We're up 1% on the day. This is a very volatile, metal in relation to gold. It actually typically has more volatility to it. So I like the story, and actually you could draw this little trend line here if you want to get fancy with it. Let's see if we can break this trend line here to the upside here today. That'd be a good signal that perhaps we see a little bit more of a move to the upside next week. We'll have to keep an eye on it. Next, we'll take a quick look at some of my current options positions, which are not going too hot. Today is probably assignment day for me on a couple different things. The ones that are expiring today, the options that I've sold expiring today are VOO, which is likely to get assigned if the stock market stays down today, which I'm fine with, which means I will have to buy 400 shares of VOO, which is just an ETF that tracks the S&P 500, TAN, which is a solar panel ETF or solar company ETF, and XLV, which is healthcare. So these are things that I wouldn't mind owning in my portfolio, and because I kind of operate a mean reversion style trading strategy, if I do get assigned VOO, I'll show you what this looks like. So VOO is a position that I have with a strike price of 460, but I collected premium, so my actual share price, I'll show you what that would be the VOO 460 is the strike price, but I sold the option for $1.90 per share. So my actual entry price would be what, 450.10, I think. It's hard to do math when you're on camera, but yeah, so I'll actually get the shares like right around here if I do get assigned, which is great because then I basically collected premium, the market sold off, and if I get assigned around this area, that would be fine because then I would have some exposure to the VOO or S&P ETF. And if that happens, then what I could do is potentially look to start selling calls against my position, which would be great because then I can start doing the wheel strategy and just collect premium again on the positions by writing covered calls. If you'd like more information about that, there is information on my strategy. We'll leave a link to that in the top right hand of the screen. And also, if you want to trade directly on the platform that I'm using here, this is called Webull. There's a link down below in the description that can get you up to 12 free shares when you sign up and deposit. Why not take advantage? It is literally free money. So take advantage, click that link down below in the description. If you're not in the US or you can't use Webull, some countries can, some cannot. There are other brokers also linked down below in the description. If you use these brokers, each one of them has special sign up perks. If you're in the US looking to trade FX, there's a welcome bonus that's down there. It'll be awesome. There's details that you can click in the link. And then also, if you're outside of the US and looking to trade CFDs like XAU USD, NAS 100, SPX, etc., you can find information by clicking the one for 8cap or for non-US traders. That's going to be great for those people, and you can actually get access to our products for free. There's some information about that on that link. Again, check it out down below. If you're looking to improve as a trader, we've got some cool free resources here that I wanted to share as we close today's video. Down below in the description, there is a link to join our Discord channel or our Telegram channel. And we also have our website, a1trading.com, where traders can get access to free course material to help you improve as a trader. Remember, we are also live Monday through Friday on this channel around 9:30 a.m. US Eastern, broadcasting most live news events and that sort of thing. So hope to see you there. And also, we do have a couple videos here showing up on the screen. If either of these seems like it might be helpful to you, then make sure to click here or here, and we'll see you there.